Welcome to the deep dive. Today we're taking a close look at Hedera, ticker symbol HBAR.
Right.
We've gathered a range of sources for you. There's a news piece on recent market activity, an overview of the pros and cons, some long-term price predictions, a blog post looking at real-world uses, a Reddit thread that digs into adoption, and also a report on some ETF delays.
Quite a mix.
Yeah, so our mission today is really to pull out the key insights on HBAR, give you a clear picture of where it stands and its potential, without getting lost in the weeds. Okay, let's jump in.
Sounds good. And right off the bat, what's interesting is that recent market movement. There's definitely been some upward momentum for HBAR.
Exactly. One source highlighted a 14% price climb just in the last week?
Yeah, that's significant.
But here's what caught my eye. Open Interest, the OI, it jumped massively, 46.8% in just 2 days, hit $232 million. For folks maybe less familiar, what does a surge like that quick tell us?
Well, a big jump in open interest, especially when the price is also going up, generally means new money is coming into the market. It signals traders are actively opening new positions.
Okay.
And that size of a jump. It suggests, pretty strong conviction among those traders that the price is headed higher, like a sudden rush of bets on a particular outcome.
Growing confidence then.
Exactly.
And it's not just the OIY, the funding rate is positive. So that means the longs, the people betting the price goes up, are paying the shorts.
That's right. A positive funding rate essentially shows that demand for long positions outweighs the demand for shorts. It acts like a kind of sentiment gauge.
So it just reinforces that bullish feeling right now.
Precisely. It shows longs are willing to pay a premium to maintain your positions, which points to confidence in further price appreciation.
Okay, let's bring in a bit of technicals. The Relative Strength Index, the RSI, apparently hit its highest point in about 6 weeks. What does that typically signal?
A rising RSI, especially getting up there, usually points to increasing buying pressure. Momentum is building on the buy side.
More buyers stepping in.
Right. Buyers are taking control, suggesting the price might have more room to run before potentially gets, overbought and maybe due for a pullback.
So the price right now is hovering around $1.80. And the article flags resistance at $3.82. That sounds like a key level.
Definitely.
Right.
$3.182 looks like the immediate ceiling.
If HBR breaks through that, what are we looking at? What are the next targets?
If it gets a clean break above 0.182, the analysis suggests the next levels could be around 0.1187, maybe even a test of $200.
A nice round number.
Yeah, often a psychological level. Breaking 0.182 would really suggest this bullish move has legs.
But what if it doesn't? What if 0.182 holds firm? What's the downside risk?
If that resistance proves too strong, yeah, we could see a pullback. The support level mentioned is around 0.162.
Okay.
And a drop to that level, according to the source, could wipe out these recent gains and, well, it might invalidate the immediate bullish case.
Right. Puts things back to square one, potentially. Okay, that gives us a good feel for the short-term market stuff. Let's zoom out a bit. Look at the fundamentals. One of our sources laid out the pros and cons. Big pro mentioned is speed, fast transactions because of Hashgraph. Why is that so important?
Well, think about real-world use cases. Waiting minutes for confirmation, like on some older blockchains, just doesn't work for many things.
Like payments.
Exactly.
All right.
Payments, micropayments, paying tiny amounts for content or any kind of rapid data logging. Hashgraph speed allows for near-instant finality. That makes it much more practical, more user-friendly.
And low fees are listed as another plus. How do they stack up?
They're generally very low and predictable, especially compared to networks where fees can fluctuate wildly based on congestion.
Yeah, those gas fee spikes can be killers.
Right. Hedera's low, stable fees make it attractive for high-volume applications or anyone needing cost-effectiveness. It encourages building on the platform.
The pros also mention robust security from Hashgraph. What makes it so secure?
It uses something called asynchronous Byzantine fault tolerance, or ABFT. It's considered a very high standard of security in distributed systems.
Okay.
Basically, it means the network can reach consensus and operate correctly, even if up to a third of the nodes are malicious or fail. That level of fault tolerance is, well, it's crucial for trust, especially for enterprises.
Got it. Now let's flip to the cons. A big one mentioned is centralization concerns around the governance. Why is that seen as a potential issue?
So Hedera is governed by a council. Up to 39 large known organizations, think Google, IBM, Boeing.
Big names.
Very big names. And while that provides stability and, accountability, some people in the crypto space argue it's more centralized than truly permissionless blockchains where anyone can participate in governance.
So less decentralized in the purest sense.
Yeah, potentially. It raises questions for some about censorship resistance or the long-term influence of these council members on the network's path.
The other con flagged was a relatively lower adoption rate compared to giants like Bitcoin or Ethereum. Why does adoption matter so much?
It's all about network effects, like a telephone network, right? The more people using it, the more valuable it becomes. Makes sense. For a DLT like Hedera, more users, more applications. That drives utility, attracts developers, builds a stronger ecosystem, and ultimately supports the value of HBAR itself. Lower adoption can kind of limit its reach and growth.
Okay, so bearing those pros and cons in mind, let's look ahead. We have some long-term price predictions from 99 Bitcoins. For the end of 2025, they're giving a pretty wide range, $0.10 to $0.40. Why so broad?
Well, that range reflects the inherent uncertainty in crypto markets, doesn't it? The dollar acknowledges potential pullbacks or retesting lower levels.
Right.
While the $0.40 suggests potential for growth if market conditions are good and adoption picks up. They also mentioned we might see some consolidation, maybe around the 30-cent mark during that year.
Then looking out to the end of 2026, the range is $0.20 to 55 cents. What pushes it to the high or low end there?
According to them, momentum from 2025 is key. If HBAR breaks decisively above that $1.40 level we talked about earlier, that could fuel a run towards $0.45 or even higher in 2026. But on the flip side, if it struggles and, say, dips below $0.10, then that lower $1.20 prediction becomes more likely. It really depends on maintaining that upward trajectory.
And way out, end of 2030, they're predicting $0.50. What are the big long-term drivers needed to potentially hit those kinds of numbers?
Long-term, it really boils down to widespread, sustained adoption, especially by major enterprises.
Real-world use taking off.
Exactly. Plus, things like favorable regulations, crypto becoming more mainstream, those are crucial. The analysis specifically points to things like the FedNow pilot with Drop as showing Hedera is ready for serious enterprise use. That kind of thing fuels long-term growth hopes.
Okay, yeah, let's dig into those influencing factors a bit more. That FedNow pilot with Drop using Hedera. Why is that specific example considered so significant?
Well, having an application built on Hedera chosen by the U.S. Federal Reserve for its instant payment pilot, that's a huge stamp of approval.
Yeah, that's major validation.
It speaks volumes about the tech's speed, security, and importantly, its ability to meet regulatory needs. It really boosts credibility and likely gets other big financial players looking.
Sustainability leadership is another factor mentioned. How's Hedera doing there?
Hedera positions itself as carbon negative, mainly due to the energy efficiency of Hashgraph compared to, say, proof of work.
Okay.
And in today's world with ESG, environmental, social governance being so important for institutions, the green profile is definitely an attractive point.
Makes sense. Partnerships were also flagged. Layer 0 support, SpaceX. What do those bring?
Layer 0 helps with interoperability. It lets apps on Hedera connect easily with over 70 other blockchains. That massively expands its reach.
Opens things up.
Right. And the SpaceX thing, using Hedera with WiseKey satellites, it just shows innovative, non-financial uses of the tech. Cool applications.
What about the DeFi ecosystem growing on Hedera and MetaMask support?
A growing DeFi scene attracts users and capital, which increases demand for HBAR. And MetaMask is, the big dog wallet.
Pretty much everyone uses it.
So integrating with MetaMask just makes it way easier for people to jump into Hedera's DeFi world. Lowers the barrier to entry significantly.
Then there's the buzz around potential spot Hedera ETFs. NASDAQ filings are in. What would ETF approval mean?
Oh, that would be huge. A spot ETF opens the door for large institutional investors who might not buy HBR directly, but are comfortable with an ETF structure.
Easier access for big money.
Exactly. It could lead to significant capital inflows and potentially drive up the price. It's a big deal for accessibility and legitimacy.
Asset tokenization gets mentioned too, with Arcax tokenizing a BlackRock money market fund on Hedera. Why is tokenization such a big theme?
Tokenization is basically creating digital tokens representing real-world assets. Think real estate, art, funds.
Right.
Doing this on a ledger like Hedera can make these assets easier to divide, trade, manage. It increases liquidity and accessibility. The fact that a regulated firm like Arcax used Hedera for a BlackRock fund, that's a strong signal about its suitability for regulated finance.
And lastly, technical upgrades are mentioned. Scheduled smart contracts, permissionless monetization, potential AI links, chain-link oracles. How do these fit in?
They're all about making the network more powerful and versatile. Scheduled contracts allow for more complex apps. Monetization options encourage new business models. AI integration could unlock new use cases. Chainlink provides reliable real-world data.
So basically adding more tools to the toolbox.
Exactly. Making Hedera more attractive for developers and enterprises to build on, expanding what's possible.
Okay, all this future potential is great, but like our Reddit source really hammered home, it's the current real-world use that drives value now. Let's talk specifics. AdStacks using HCS for ad fraud, 2 million transactions a day. That sounds like real usage.
Oh yeah, that's substantial. It shows Hedera handling a big problem ad fraud at scale, reliably every day. It proves the enterprise capability for high throughput.
And the Coupon Bureau, shifting the entire U.S. coupon system, potentially 75% of the market, onto Hedera. That scale is just mind-boggling.
It really is. It's a fundamental change for a huge industry, moving to these universal digital coupons on Hedera, tracking digital and paper.
Yep.
It's massive. And they're looking at Canada and the UK too. That's a game changer type of use case.
We also saw ServiceNow using HCS internally, described as a lighthouse client. Why is that phrasing significant?
ServiceNow is a giant in enterprise workflow solutions. Their clients are huge corporations globally.
Right.
So them using Hedera internally isn't just validation. It exposes the technology to all their major corporate customers. It's like a beacon, potentially drawing others in.
There are others too. Shunhan Bank using stablecoins for remittances, ETF POS in Australia for payments, Avery Dennison tracking billions of items with Atma.io. It's really diverse.
Absolutely. Finance, payment, supply chain. It shows the tech isn't just a one-trick pony. It's solving different problems in different sectors. That breadth is important.
The Reddit thread even dropped hints about a Fortune 10 company, maybe Walmart, maybe Amazon, building something unannounced, and Google, a council member, having unannounced uses too. Lots potentially happening behind the scenes.
Yeah, those whispers, even unconfirmed, they definitely fuel speculation about even bigger things coming down the pipeline. More potential validation and network demand.
Which brings us to a key question from that Reddit discussion. How does all this usage actually make HBAR, the token, valuable? It's not always obvious.
That's a crucial point. Every single thing done on the network logging data with HCS, transferring tokens with HTS, running smart contracts, it all requires HBAR to pay for the network services.
The gas fees, essentially.
Right. But importantly, those fees are pegged to the US dollar. They're designed to be tiny and stable, like fractions of a cent.
Okay, so stable cost for users.
Exactly. So as network usage goes up, more transactions, more apps, the demand for HBR to pay those fees goes up. Even if the fee per transaction is tiny, billions of transactions means significant demand for HBR.
And that creates buy pressure.
Precisely. Plus you have staking, where HBAR is locked up to secure the network, which further reduces the circulating supply. So increased demand means potentially shrinking available supply.
Someone on Reddit actually asked if the HBAR price getting too high would make it too expensive for enterprises. But that dollar peg answers that, right?
Exactly. The cost to use the network stays stable in dollar terms. So a higher HBR price doesn't hurt enterprise users. It actually makes the network more secure because the value securing it is higher. It decouples usage cost from token price volatility.
Got it. Okay, let's quickly clarify the tech itself. One source compared Hedera Hashgraph to blockchain. What's the core difference in simple terms?
The main thing is the consensus mechanism, how they agree on transactions. Hedera uses Hashgraph, which relies on that ABFT algorithm we mentioned.
Not proof of work or proof of stake like most blockchains.
Right. And the data structure is different too. Hashgraph uses a DAG, a directed acyclic graph. Think of it less like a chain of blocks, one after another.
More like a web.
Kind of, yeah. It allows for parallel processing, which leads to higher speed, faster finality, and better energy efficiency than many traditional blockchains. Right. Plus, the governance council model is quite different.
So technically, Hedera isn't a blockchain. It's a DLT using Hashgraph.
That's the accurate way to put it. It achieves similar goals, distributed trust, immutable records, but through a different technological approach.
Okay, good clarification. Lastly, let's touch on the news about the SEC delaying the decision on Canary Capital's spot HBAR ETF, pushed to June 11th. What's the context here?
Well, it's not entirely surprising. After the Bitcoin and Ether ETF approvals, the SEC is facing a backlog of applications for other cryptos.
A lot waiting in line.
Yeah. And they seem to be taking a cautious stance, wanting more time for review, public comments, ensuring investor protection is solid. The source did note a potential shift towards more openness under the current administration, but caution still seems to be the watchword for new crypto products like this.
Okay, so let's try and wrap this all up. HBAR. It's showing some interesting short-term bullish signs in the market. Fundamentally, the tech has clear advantages: speed, cost.
Definitely. Big advantages.
But there are those centralization questions around governance and adoption, while growing with some really impressive use cases still needs to become more widespread compared to the leaders.
Right. The potential seems really tied to nailing that enterprise adoption long term.
Yeah.
Leveraging the tech for real business needs.
Despite regulatory things like ETF delays potentially slowing down mainstream access.
Yeah, the regulatory side is always a factor.
So it feels like we're seeing this tech built specifically for business starting to really connect with major players.
It does feel like that. Those use cases aren't trivial. They're solving real problems for big organizations.
Okay, so here's a final thought for you, the listener, to chew on. What happens if this kind of enterprise-focused DLT really hits escape velocity? If it becomes deeply integrated into how businesses operate? Think beyond just HBAR's price today. What could widespread adoption of such a technology mean for digital transactions, for how assets are managed, for supply chains, the fundamental plumbing of commerce?
And maybe think about what other foundational technologies might be bubbling under the surface right now, quietly building, ready to potentially reshape things in ways we haven't even fully imagined yet.
Definitely something to ponder. Thanks for joining us on this deep dive.